On November 3, 2025, the cryptocurrency market faced a sharp correction, with Bitcoin BTC falling to $107,654, following a brief weekend rally that had pushed it above $111,000 on Sunday, November 2nd. The 2.9% daily decline, equivalent to roughly $4,000 in less than 24 hours, reflects a confluence of institutional-scale selling pressure and rising geopolitical uncertainty, creating a higher-risk environment for volatile assets. Two primary factors explain this abrupt pullback. The first is the coordinated movement of large long-term Bitcoin holders. It's known as OS's original holders, who, according to data from Lukanchen, have transferred over $1.8 billion worth of BTC to centralized exchanges in recent weeks. Many of these wallets have remained dormant since Bitcoin's early days, 2010 to 2015, and rarely move their holdings when they do. It is almost always to take profits or rebalance allocations. The mass inflow of these coins onto trading platforms suggests an advanced distribution phase, where long-term investors sell to short-term buyers, a classic hallmark of market tops. The second factor is geopolitical and political in nature, with former U.S. President Donald Trump reigniting international tensions amid his 2026 re-election campaign. In remarks made on Monday, Trump labeled the upcoming Supreme Court case scheduled for Wednesday, which will rule on the legality of tariffs imposed during his administration, as the most important case in U.S. history. He vigorously defended the executive branch's authority to impose tariffs as a tool of economic protection and national security, warning that any limitation on this power could ruin the nation. Additionally, Trump referenced ongoing conflicts in Nigeria and Venezuela, suggesting the U.S. might not rule out military intervention should these crises escalate. In a global landscape already sensitive to geopolitical shocks from tensions in the South China Sea to instability in the Middle East, such statements amplify global risk aversion, prompting investors to seek safe haven assets like the US dollar and treasury bonds and reduce exposure to risk assets, including cryptocurrencies. This dual shock, veteran BTC selling plus Trump's geopolitical rhetoric, crippled across the entire crypto market. Ethereum ETH dropped 4.7%, trading around $3,700. BNB fell 6.5%, trading to $1,015. Dogecoin Doge plunged over 6% in 24 hours, trading at 17 cents, while XRP recorded a 5.2% daily decline, settling at $2.41. The aggregate impact was felt in the total crypto market capitalization, which contracted 3.7% over the past 24 hours to $3.68 trillion. Despite the pullback, Bitcoin maintains a solid dominance of 58.3%, followed by Ethereum at 12.2%, indicating that even amid volatility, investors still view BTC as the ecosystem's core asset, both as a target for profit-taking and as a benchmark of value. Analysts note that this move does not necessarily signal the start of a bear market, but rather a healthy correction after weeks of gains fueled by ETF optimism, expectations of interest rate cuts, and institutional inflows. However, the convergence of technical and macro factors makes the short-term outlook especially volatile. The presence of large BTC volumes on exchanges increases the risk of further selling, particularly if prices break key psychological supports like $105,000. Meanwhile, any escalation in geopolitical tensions, whether through actual actions or election year, rhetoric could intensify the flight to safety. Historically, Bitcoin has shown resilience during crises, often recovering quickly after sharp corrections. Yet the difference in 2025 is that the market now operates with greater institutional participation, which can amplify both rallies and sell-offs depending on global sentiment. As pension funds, ETF issuers, and corporate treasuries adjust positions in response to shifts in monetary policy and geopolitics, Bitcoin's price becomes increasingly sensitive to news beyond the crypto ecosystem. In summary, Monday's decline should not be viewed in isolation, but as part of a natural rebalancing process in a market that, while mature, still reacts intensely to external shocks. For long-term investors, this correction may present an accumulation opportunity, especially if fundamentals remain intact. Continued institutional adoption post-halving programmed scarcity and growing integration with global financial infrastructure. For short-term traders, however, the environment demands extreme caution. With a strong focus on risk management and continuous monitoring of on-chain flows and geopolitical developments, as the world watches Trump's next moves, the Supreme Court ruling, and the behavior of Bitcoin OGs, one lesson remains clear: in interconnected markets, Bitcoin's price is no longer driven solely by technology or supply, but by the global climate of confidence, power, and uncertainty. And today, that climate is visibly more turbulent.